You have lost money in the market. Maybe it was a small loss. Maybe it was big enough to keep you up at night. Maybe it was bad enough that you stopped telling people you trade because you're embarrassed about what happened to your account. You are not alone. 90% of retail traders lose money, not because the market is rigged, not because the big banks are out to get you, but because nobody ever taught them a real system. They came in with hope, a few YouTube videos, maybe a Discord group, and they got absolutely destroyed. Maybe that was you. Maybe that is still you right now. And the worst part is not even the money. The worst part is the voice in your head that says, maybe you are just not built for this. Maybe you're not smart enough. Maybe everyone else sees something in the charts that you simply cannot see. I need you to hear me right now. That voice is lying to you. The problem was never you. The problem was that you were playing a game with no rules, no system, and no edge. And today, that changes completely. Today, I'm going to walk you through the exact strategy that a group of ordinary people used to turn a simple set of rules into over $100 million in profits. Not hedge fund managers, not MIT graduates, regular people who were handed a system and told to follow it. It is called the turtle trading strategy. And after this video, you will know exactly how to use it in 2026 to stop losing and start building real, consistent results in the market. Stay with me. Everything you need is in this video. In 1983, a trader named Richard Dennis sat down with his business partner William Eckhart and made a bet. Dennis believed that trading was a skill anyone could learn. Eckhart believed you either had the gift or you did not. So they did something extraordinary. They placed a newspaper ad and hired 23 strangers, a security guard, a blackjack player, an actor, people with zero trading experience. They trained them for 2 weeks. 2 weeks, that's it. They taught them a simple, mechanical, rules-based system. Clear entries, clear exits, clear position sizing, nothing complicated. Then they gave them real money to trade. Over the next 4 years, those 23 people generated over $100 million in verified trading profits. 100 million. 2 weeks of training. Ordinary people. Now, think about your own trading journey. How long have you been at this? How many hours have you spent watching charts, reading books, studying candle patterns, trying indicator after indicator, and still feeling like something is missing? The turtles did not have more time than you. They did not have better technology. They did not have secret information. They had a process, and they followed it without question. That's it. That's the whole secret. Before I give you the rules, I need to talk about why you have been struggling, because if you do not understand this, even the best strategy in the world will not save you. Here is the honest truth about retail trading in 2026. You are probably making your trades based on feelings. You see a stock moving and your brain says, get in. You're already in a trade and it drops 2% and your brain says, hold on, it will come back. You watch a trade hit your target, but your gut says, let it ride. So you do, and then it reverses and you give back everything. Every one of those decisions was made by emotion, fear, greed, hope, ego. And emotion in trading is a slow death sentence. The turtles did not trade on feelings. They traded on rules. When the rule said buy, they bought. When the rule said sell, they sold. When the stop was hit, they got out. No discussion, no second guessing, no hoping it comes back. That level of discipline is what separates the 1% from the 99%. The good news is, discipline is a skill. You can build it. And the turtle system is designed specifically to make that easier because there is no room for interpretation. The rules are the rules. Now, let me give you the actual strategy. There are 2 systems. Both are built around the same idea. Price breakouts tell you when a trend is beginning. System 1 is the shorter-term entry. You look at the last 20 trading days, find the highest price over those 20 days. If today the price closes above that high, that is your entry signal. You buy. On the short side, it works in reverse. Find the lowest price over the last 20 days. If today the price closes below that low, you go short. There is one important filter for System 1. If the last breakout signal in this system ended up being a profitable trade, you skip the next signal. The reason is simple. When a trend has already been running, the odds of the next breakout continuing that trend drop. You want to catch fresh breakouts, not tired ones. System 2 is the longer-term entry. Same idea, but now your window is 55 days. If price closes above the 55-day high, you buy. If it closes below the 55-day low, you sell short. No filter needed. You take every single signal. System 2 is where the real money lives, the massive multi-week trends that most traders either miss entirely or bail out of way too early. The turtles used System 2 to catch the moves that changed their accounts forever. Here is the mindset you absolutely must accept to trade this system successfully. Most of your entries will fail, maybe 7 out of 10. The turtles knew this. They planned for it. They built their entire risk model around it. Because when that one trade in 10 actually runs, and it runs for 30, 40, 50%, that single trade wipes out all the small losses and leaves serious profit behind. The question is not whether you can pick winners. The question is whether you can absorb small losses with discipline long enough to catch the trade that matters. This is the part of the video that will either save your account or, if you skip it, eventually destroy it. The biggest reason traders blow up accounts is not bad entries, it is terrible position sizing. They bet too big when they're confident and wonder why one loss wrecks them. They go heavy on a gut feeling trade with no logical stop and watch it take 20% of their account in one afternoon. The turtles had an airtight solution for this. They used something called average true range to measure how volatile any market was on any given day. Average true range simply tells you how far a market typically moves in a single session. A calm market might move 50 cents. A volatile market might move $5. The rule is this: never risk more than 2% of your total account on a single trade. Your stop loss is placed 2 times the average true range away from your entry. If the market is calm, your stop is tighter, and you hold a slightly larger position. If the market is wild, your stop is wider, and you automatically hold fewer shares. The brilliance of this system is that your risk stays constant, even as volatility changes. You are never overexposed. You never wake up to a gap down that wipes out a week of gains. The math protects you automatically. On TradingView, add the ATR indicator set to 20 periods. Whatever number it shows, multiply it by 2. That is your stop distance from your entry price. Size your position so that if the stop is hit, you lose no more than 2% of your account. Write it on a sticky note and put it on your monitor. Now let me talk about something that is costing you enormous amounts of money right now, even if your entries are decent. You are exiting your winners too early. You get into a trade, it goes up 5%. You feel amazing. Your brain starts calculating how much money you just made. You tell yourself this is a great trade, time to lock it in, so you sell. And then you watch that stock run another 40% over the next 3 weeks without you. That feeling, that stomach-dropping, screen-staring feeling of watching a winner go without you, that is what the turtle exit rules were designed to prevent. For System 1 trades, you stay in the trade until price closes at a 10-day low if you are long, or a 10-day high if you are short. For System 2 trades, you stay in until price closes at a 20-day low for long positions, or a 20-day high for short positions. Notice what you are not doing. You are not picking a profit target. You are not saying, I will take 10% and be happy. You are letting the trend itself tell you when it is over. This is called a trailing exit, and it is one of the most powerful concepts in all of systematic trading. It keeps you in the big moves that build wealth while automatically protecting your gains when the trend finally breaks down. Trust the exit. Stop leaving the trade early. The system knows when to get out better than your emotions do. Here is your complete setup, and it takes about 5 minutes on TradingView. Open TradingView and pull up the market you want to trade: stocks, ETFs, Bitcoin, major futures contracts. This strategy works on all of them as long as there is enough liquidity and the market actually trends. Add a Donchian channel indicator and set the period to 20. This automatically draws your 20-day high and 20-day low directly on the chart. When price breaks above the upper line, that is a System 1 signal. Add a second Donchian channel and set this one to 55. When price breaks above this upper line, that is a System 2 signal. Add an ATR indicator set to 20 periods. This gives you your volatility number for position sizing and stop placement. That is the entire setup. 3 indicators, nothing else. No RSI, no MACD, no Fibonacci retracements, just the 2 channels and the ATR. When you see price close above a channel high, calculate your stop distance using 2 times the ATR value, size your position to risk 2% of your account, enter on the next candle open, and place your hard stop in the platform immediately. Then step away and let the trade work. I am going to be completely real with you now, because this is the part most trading videos skip over, and it is the most important thing I will say in this entire video. You are going to have losing streaks with this system. 6 losses in a row, 8 losses, maybe 10. The turtles experience this. It is part of how the system works. And during those losing streaks, something very specific is going to happen to you. Your brain is going to tell you the system is broken. It is going to tell you to stop taking signals. It is going to whisper that maybe this one is different. Maybe just this once you should skip the rules. Maybe you should add one more indicator to confirm. Every one of those thoughts is the enemy. The turtles did not succeed because they were smarter or luckier than everyone else. They succeeded because when their brain said stop, they kept going. When it said, this signal does not feel right, they took it anyway. When it said, take the profit now, they stayed in. Process over feelings, rules over instincts, every single time. Here's what I want you to do starting today. Open a paper trading account. Execute this system in simulation for 30 days before you risk a single real dollar. Not because the rules are complicated, but because you need to build the muscle memory of following a process when it is uncomfortable. When you can look at a stop-loss hit and feel nothing but neutral because you followed your rules and that is exactly how it is supposed to work, you are ready to trade real money. Until then, paper trade, build the habit, earn the right to size up. Let me bring this home. The turtle experiment happened over 40 years ago, and the strategy still works today. Not because markets are the same, they're completely different now. It works because human psychology has not changed. Fear, greed, hope, and panic are the same as they were in 1983. They always will be. Trends still form, breakouts still happen, and the trader who waits patiently, enters at the right moment, sizes correctly, cuts losses fast, and rides winners all the way, that trader still wins. You now have that exact system. The 20-day and 55-day breakout channels are your entries. The 2 times ATR stop is your protection. The trailing channel exit keeps you in the big moves. The 2% rule keeps your account alive through every losing streak. You have everything. All that is left is the choice. Are you going to go back to trading on feelings and hoping something finally changes? Or are you going to follow a system that has been proven by real people trading real money for over 4 decades? I think you already know the answer. Otherwise, you wouldn't still be here. Drop a comment below and tell me one specific thing from this video you are going to implement this week. Just one thing. Start small. Build the habit. If this gave you something real, subscribe for more straightforward, no-nonsense trading content. Hit the like button so more traders can find this video. I will see you in the next one. Go follow the trend.